Hello everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predict gold prices. So in the last video I said gold would be going up at a very slow pace or stay even stable, and that's actually exactly what is happening. So gold has done nothing, so it's just stable around the 1780 level, and well, we'll see what our data point tells us today. So let's look at the Gold Forecaster Index. The Gold Forecaster Index is telling us a small uptick in growth, but the trend is still down. Okay, the trend is still down, but we're still above the zero line. That means that gold will probably be moving higher, but at a slow pace. And this is actually disinflation. So we have less and less inflation, which will be not so good for gold. But I think we are getting into the season of gold, and it should go higher from now on, but at a very slow pace. Taylor roll rate hasn't changed yet. Mannorino Index is in a downtrend, so don't expect gold to go up very soon. So it's probably stable. This is not that good, but that's old data, still needs to get updated for the next quarter. Chile and Peru were stable, so mine supply is stable. Here we still have no institutional buying for gold. COMEX gold also no buying. So it isn't looking that well. India gold imports were very good. SGE deliveries for gold are actually up. You can see here the gold demand is up and silver demand is very stable. So it looks like China is now buying the dip. So you better follow the Chinese. I think gold is really bottoming out. SLV is stable. We still have this head and shoulders pattern. So let's watch this. Chinese demand, I think it was rebounding. The latest data would show that. So silver is probably also at the bottom. COMEX silver is dropping, so that's actually a good sign. That means that stock levels are low. Okay, we had central bank data. They were pretty stable. So all in all, the central bank gold holdings were stable. We see that India has kept on buying. Turkey sold. Thailand bought a lot of gold. And Brazil doubled its gold holdings. But overall it was stable. US mint sales are still trending up, but yeah, it was actually down from last month, but the bigger trend is still up. So that's still a good sign. There's still demand. Premiums are at 50%, very stable here. And I expect these premiums to drop again, and then silver will go up. Same with the junk silver. Premiums have started to go up again, so this could be a bottom. Shanghai gold premiums were up at 0.7%, so that's very good. That shows us that the Chinese are dip buying. Gold premiums are also elevated. The PSLV premiums were not that good, so I think the Americans are not buying yet, but the Chinese are. I would follow the Chinese. Gold COT report, let's open that. Actually very good. You can see that the shorts are covering. The silver COT report, very good. Here you can also see that the shorts are covering. So that points to a bottom. Here also the swaps are still long. So silver is probably starting to run up again. A lot of managed money short positions to squeeze out. The same here also with gold, and here also. So I think this is a buying opportunity. Nothing to see here. Lease rates were pretty stable. Let's take a look. Okay, so nothing to see here. A little bit of a bounce here, so we could see a bounce in gold. And silver the same here, but it's going down again, so not looking that good from a lease rate perspective. Swiss franc hasn't done that great lately, but maybe this is a bottom. Tips are pointing up again from here, so maybe we can see a further bounce to the 70-80 level. Real yields, yeah, this is a mystery to me. Normally when this goes up, then gold should also go up because we have negative real yields, but we are not seeing it. Very mysterious. We are now in October, so a little bit of a decline in gold coming, and then we will bottom out in November to go to a new high until February. Silver also seasonally weak, and then we will see a rise. So this is a buying month from my perspective. Technicals are the same, cup and handle, same here, a drop, and then we get into a bull market. Let's take a look at the miner sentiment. Miner sentiment is at rock bottom here. So probably we are seeing a bottom in gold as well. As you can see, these are all bottoms. This should also be a bottom. Okay. Let's take a look at the leading indicators now. So leading indicators are telling me that we're still growing, but at a slower pace. So growth is slowing down, but I think there's still some juice left to squeeze in the stock market. Profits are still rising. So I think it's still looking good for the stock market. Money supply. Money supply was actually rising, so that's good. We're still in inflationary times as long as money supply rises. The currency in circulation is a bit too stable to my taste, so I want to see this go much higher. So that's a bit of a concern here. Okay, loans. Loans are actually rising again, but the latest data here, we see a drop here from 62 to 54. That's not a good sign, so let's watch this. But the overall trend is still upwards, but this is a bit concerning. this latest data point. We need to see lending grow. Balance sheets are still rising in an uptrend, so that's good for the stock market and also for inflation. An update here on Yellen's wallet. So in the last video I said Yellen's wallet was empty. Apparently it was not that empty because she lost for a month later, so the wallet is now even more empty. It's at below 200 billion now. So I think the government is running out of money by the 18th of October, so they really need to increase the debt limit by then. You can also see reverse repo hitting new highs and reserves going down again. So let's watch the debt limit. Once that debt limit is increased, then gold is going to go up again because gold is correlated to debt to GDP. I'll show you a chart later on. Let's take a look at inflation. Inflation has actually stopped growing, but it's still at a very high level, at 5% based on Michigan inflation expectations. Very high, and from a daily chart it's pretty stable at 2.4% for the 10-year break-even rate. So we still see inflation, it's not going away, so that's good for gold. Then let's take a look at the rate hike, the tapering. So this is something that we need to watch. The 2-year yield is actually a predictor of a rate hike. So if this chart keeps rising, then you can bet that a rate hike is coming. So this is an important chart. So they are saying that probably tapering will start in November, December. We will see. And when we look at this chart, then I think the market still thinks that a tapering will come in the coming months. So that's something to watch. Then we have capacity utilization. Capacity utilization was up, very good for gold, because that means more inflation will come. The trade deficit, let's take a look at here. I said in my last video that services were actually plunging, and now it's plunging again. Look at this. The August number, we saw a drop of 17,516 to 16,116. So that's a very large drop. You can see it from here. A very large drop in services. So something bad is happening, and I have been warning about this. This is really quickly going to zero. So then we have no services surplus anymore. And we also have a goods deficit. And you can see this from the deficit chart. So the trade balance keeps going lower and lower, together with the twin deficit of budgets and current account deficit. So it's not looking great for America. We still have this deficit gap between import and export prices. So yeah, that's the situation. When you have high deficits, probably the dollar will also fall. But apparently the dollar has been going up. I don't know why, but it should fall soon. We also have this data here. So for the second quarter, we saw that the dollar has lost reserve currency status. So it started at 65%. We are now below 60%. So this decline is the fall of the reserve currency. And who is rising? Of course, China. Renminbi is rising. And also Japan is rising. The euro is pretty stable at 20%. Something to watch for. Then I also want to mention the Mannorino Index, which is actually called the Mannorino Market Risk Indicator, created by Gregory Mannorino. And actually, I was very skeptical about this index, but when I created the chart here, it actually works. So this is the index. It's just dollar multiplied by the 10-year yield. And when this is high, then you have extreme risk. So for example, here you have extreme risk, and then the stock market actually starts to fall. And when you have low risk, for example here, that's 80. So 80 is low risk. Then you see that the stock market rises very fast. Somewhere here, for example, is high risk. And you see that the stock market is actually very flat and doing nothing. And when you have low risk here, then the stock market is starting to rise rapidly. So I think this indicator really works. Same here, low risk, and we have a bottom. Here, high risk, and we see that stocks aren't doing anything. So I'm going to use this indicator. I already added it to the copper checklist because you can actually predict what stocks will be doing, and copper is just following the stock market. So very interesting index. Another thing that I noticed was that the Federal Reserve Bank of New York has lost some gold holdings. So these are foreign gold deposits, and I saw that they were always at the same level, but now something is happening. So some gold has been taken from foreign depositors, and typically this happens during difficult times. For example, here in 2001 with the Nasdaq crash, or here in the Great Depression or the recession in 2008, then these things start to happen. Also in 2015 we had a small crisis, oil crisis, and these things happen. So watch this. This might be a sign that something bad is going to happen. You can also see that here. So here we had a crash in the S&P, here also, and here in 2015. So what is going to happen today? I don't know, but we need to watch for it. Then chip shortages. So I think semiconductor sales are going to keep rising. There is a chip shortage. Robotics are the future, and you can see here tin has been on a run lately. So Alphamin was a very good buy. Just a side note. Okay, now the Zillow rent index, so something that I found out, a very nice indicator. Apparently the Zillow rent index provides real-time rent prices, and with this you can actually predict the CPI for rent. And this is actually a very big part of the CPI. So we need to follow this. And I have created a chart of all the data. So we see the Zillow rent index shoot higher. It's probably above 8% right now. So all of this Zillow rent increase will be going into the CPI rent soon. So you can see here the rent index. Whenever it starts crashing, then you can see that the CPI will also start crashing. Whenever it goes up, then the CPI rent goes up. So now we see this go higher. So the rents are going to go higher. And this will reflect itself in the CPI. So I think gold might be rising due to this. And we can predict this right now. I think CPI will rise in the coming months. So it's looking very good for gold. Another correlation, virus versus the NFP, non-farm payrolls. And as you can see, the virus is correlated to the non-farm payrolls. And we now know that the virus is actually subsiding. So I think that the non-farm payrolls could surprise to the upside because COVID is going away. Interesting to know. And we also got the FOMC meeting. So the old dot plot, no rate hikes. And now the new dot plot, some rate hike coming in 2023 and also in 2022. But yeah, they're just increasing their expectations on rate hikes a bit. What's very interesting is that real GDP, look at this, real GDP is actually, so this was June, 6.8, 2.8, and now GDP is actually lower, okay? It's going to be lower. And for inflation, we had in June 3.1, now it's actually higher. So they're projecting a higher inflation and lower GDP. That sounds good for gold because gold likes high inflation and low GDP, which means stagflation. We already talked about this, central bank reserves. Here's a very nice chart that I wanted to share. Debt to GDP versus gold price. Very correlated, okay? So once Yellen is going to raise the debt ceiling, we will see a spike in debt to GDP. And this will propel gold higher. Okay, it is going to go higher, probably go back to the 2000 level, and I expect that the debt ceiling will be raised very soon. This is correlated. Yeah, the daily increased his outlook on stocks again, so we had this 4,500, 5,000, 5,400. And it has changed to 5,200 and 5,500. So that's actually an increase, okay? So I expect stocks will go higher and gold will also go higher together with commodities. And this is the last chart. All the balance sheets of the whole world, China, England, Japan, ECB, Fed, will all be increasing, okay? Will all be increasing. So you can see that this is a projection. is also the projection that we saw here with Yardeni. So I think Yardeni is basing this on the increase in balance sheet. So you can expect stocks to go higher by 10 to 20% in the coming years. What happens here, I don't know, but today I think everything is going to move higher. And also gold. So that's the conclusion. Everything will go higher, and I'll see you in the next video. Bye.